Welcome to our 7th unit on recording financial transactions. In the 7th unit, we are going to see how to prepare what we call a cash book. We recall when we were listing books of prime entry, cash book was one of the books of prime entry. So in this unit, we will look at how transactions are recorded in the cash book. How do we post transactions and which transactions do we post in the cash book? So in this unit, we are going to look at the following items or the following areas. 2-column cash book. There is a type of cash book known as a 2-column cash book. We will look at 3-column cash books. How do we write up a cash book? How do we cast? Casting is just getting the totals. How do we cast? Casting and cross-casting the cash books and posting the cash books to the general ledger. And maybe we can add 2 more areas to make it a total of 7 subtopics under this unit on preparation of a cash book. So to start us off, there are 2 major types of cash books. There is what we call a 2-column cash book and a 3-column cash book. The difference between 2-column cash book and 3-column cash book, all the cash books, whether 2-column or 3-column, they have what we call cash section and bank section. Cash sections, we record receipts of money through cash and payments of money through cash. Bank section, we record receipts of money through bank and payments of money through banks. That means a cash book has got both the debit side for receipts and credit side for payments. So in a 2-column cash book, the key point is the last 2 columns are cash and bank. On the other hand, cash and bank. On the other hand, there is what we call a 3-column cash book. We are adding 1 item called discount. So in a 3-column cash book, there is a column that shows the discount allowed, the discount you allow if you are receiving, and the discount received if you are making payments. So when you are making payments, you receive a discount. When you expect money from customers, you give them a discount. You allow a discount. So the key point in a 3-column cash book, there is what we call discounts section. We will come to good examples on cash book. We will focus on that. So there are 2 types of cash books, either a 2-column or a 3-column. We will look at and prepare those cash books when we are winding up on this unit. Now, casting and cross-casting the cash book. Once you have posted all your entries in the cash book, even if they are 30 or 50, maybe in a month, you need to get the total on the debit side and also the total on the credit side. The total of number 1, the bank section, the total of the cash section, and even the total of the discounts. So that process of trying to get the totals on both the debit side and the credit side is what is known as casting. Number 4, calculating the cash balance. Once you have gotten the totals, you need to compare the difference between the debit side and the credit side. The side that is less gives rise to a balance. So you get the total of the cash in the debit side, maybe it's 1 million. The total in the credit side is maybe 800,000. It means there is a difference of 200,000. This 200,000 is what is called the cash balance. Cash balance. So in that case, the balance can either be positive or it can be negative. When is it positive? When the total on the debit side is more than the total on the credit side. When is it negative? When the total on the credit side is more than the total on the debit side. Now that is for the bank. But in the cash column, it can only be an asset if it is positive, or it is zero, because you cannot have negative cash. At some point, the cash will be over and you will stop paying through cash. So cash cannot go negative. So in the cash section, it is either it's positive, which reflects an asset, or it is zero, or it is nil. The fifth area is posting the cash book. Once you have prepared the cash book and you have gotten the totals, this cash book needs to be posted in what we call a general ledger. We had already reflected on general ledger in Unit 2 when we were looking at books of prime entry, and then we also explained what a general journal is, or a general ledger is. Now, an important difference between cash book and other books of prime entry is that it can either be a book of prime entry as a source document, or it can be both a book of prime entry and part of the general ledger. What we are trying to say is this: cash book can be a book of prime entry alone, or it can be both a book of prime entry and part of a general ledger. It's the organization to decide how to classify that. Posting the cash book as, remember there are two options, either as a book of prime entry or both as a book of prime entry and part of general ledger. So if it's only a book of prime entry, what is the effect of that? If the cash book is a book of prime entry only, the totals of the cash book and bank columns in the cash book will need to be posted to the cash account and bank account in the general ledger. So if it's only a book of prime entry, the totals of the cash and the totals of the bank will need to be taken to the general ledger. There will be a separate cash account and a separate bank account in the general ledger. The other way of accounting for a cash book is both as a book of prime entry and also as a general ledger. In many businesses, the cash book is treated as both a book of prime entry and a general ledger. The effect of that treatment is this: there is no need to post the debit and credit entries from the cash and bank columns to the general ledger. So if you are treating it as both a book of prime entry and part of the general ledger, you don't need to make a posting from cash book to the general ledger. Number two, there is no separate cash or bank control accounts in the general ledger. We don't need the control accounts in the general ledger. And number three, the analysis column and the discounts column are posted as normal. We now have two examples we want to focus on. Number one, before we look at practice questions. Remember, in S1.1, all questions are multiple choice, but we must build the concept before we go to multiple choice questions. So remember, we said there are two types of cash books, either a 2-column cash book or a 3-column cash book. We want to now start a question with a 2-column cash book. We recall that in a 2-column cash book, we have said there is a debit side, so this side is called the debit side, the side of receipts. So that side is called, this side is called debit. And this other side is called credit. So debit side reflects receipts, what comes into the business. Credit side reflects the payments out of the business. So we have in a 2-column cash book, there is only cash and bank. Cash and bank. While in a 3-column cash book, which we will later on look at, there is cash, bank, and another new column which is called discount. So let's look at 2-column cash book. Write up a 2-column cash book from the following details and balance off at the end of each month, at the end of the month of May 2023. So any transaction you will read, the question is, you ask yourself, is it a debit or a credit? If it is money coming in the business, it's debit. If it's money going out of the business, it's credit. So let's read each transaction. Started the business with a capital of 1,000. So this is cash received because it's capital. So if it's capital, the first one, it was on the 1st of May, there is We started the business with capital, and it was in form of cash, and it was a capital of 1,000. That is transaction number 1. We received capital in form of cash. There is the key word there, cash. Number 2, paid rent by cash. Payment is credit because it's money going out. So that is the second date, May 2nd. So the date here is 2nd. I can use May. So what did we pay? We paid rent, and it was by cash. So we paid rent of 100. The next date, F. Lake lent us 5,000, paid by, lent as it means we borrowed from that person. So we borrowed, that is the next date, 3rd May. If we borrow, it's a receipt. What is the name of that person who lent us? F. Lake. F. Lake lent us how much? 5,000 paid by check. So he lent us 5,000 paid by check. So it goes to the bank if it's a check. Next, we paid going out. We paid B. Mackenzie by check 650. So on the 4th May, we paid B. Mackenzie. We paid B. Mackenzie 650 by, B. Mackenzie by check. So 650 by check. So 650. It is by check. Next, cash sales of 980, 5th May. Sales is a receipt. So there was cash sales of 980. Is it 980? Yes. Next, N. Miller paid us. Paid us. We received. Paid us. N. Miller paid us how much? 620 by check. So on 7th May, okay, it is N. Miller. Paid us by check 620. So it is 620 by check. Next, we paid B. Barton. We paid B. Barton 220. So which date is that? We paid B. Barton, 9th May. 9th May. We paid B. Barton by check, I suppose. Sorry, we paid B. Barton in cash, 220. So cash 220. Next, cash sales paid direct into bank. There was sales that was made paid direct into bank. How much? 530. So 11th May, cash sales direct into bank. It went into bank. Paid direct, so that is 11th, yeah? 11th, 530. Next, G. Mose paid as we received by cash, 15th May. 15th May, G. Mose paid as by cash, 650. Next, we took 500 out of the cash till and paid it into the bank account. We removed 500 from the cash and paid it into the bank. This is an example of what we call a contra entry. Contra entry is an entry that affects both the receipt and payment. Let's read it again. We took 500 out of the cash till. So we removed 500 from the cash. Let me post it here. 500 is going out of the cash and paid into the bank. And the bank is receiving the 500. So on the receipt side is on the bank. On the issue side is on the cash. And what is the date? It is 16th. So 16th May, and it is also 16th May. This is an example of what we call a contra. So here it's bank. We'll call it, it is from the cash. So, and then we call it a C. C represents contra. Here it is cash, so we'll call it bank. And we call it C. C means it's a contra. A contra is an entry that affects both the debit side and the credit. Money is coming out of our cash and money is going into the bank. Next, we repaid F Lake 1,000 by check. So that is 19th. So we paid 19th May. We repaid F Lake by check. So by bank, we paid 1,000 by check. Next, cash sales paid direct into the bank, 22nd May. So 22nd May, there is sales but paid directly into the bank. It is 660. Next, we have paid motor expenses on 22nd. Is it 22nd? 26th May. Motor expenses. So we paid motor expenses 120 by check. And then next, withdrew 1,000 cash from the bank for business use. We withdrew from the bank for business use. So withdrew from the bank. So business use expenses. So we withdrew cash 1,000 from the bank. So bank is losing 1,000. On which date? On 30th May. And then lastly, paid wages 970 cash. 31st May. Wages how much? 970. Now this is what is called posting entries into the cash book. Once the entries have been posted, we need to skip one line on the longer side. We skip one line and then we come and get the totals. Totaling is what we had called casting. To cast is to get the totals. So we get the total of the debit. Like here we have 1,000 plus 980 plus 650. It gives us, I can maybe record it somewhere as 20. You don't need to see that. It's just for my own purposes. 2630. So the total on the debit side cash is 2630. And on the credit side, we have 100 plus 220 plus 500. It gives us 820. So here it gives us what? So the amount that is more is the one that we post on both sides. So 26 is more than 820. So here I'll come and write 2630, 2630. And then I get 2630 minus the total of these. So the total, that gives me, it gives me 2630 minus 820. So that gives me 1810. So this one we'll call it in the last day, 30 May, we'll call it balance carried down. That is for the cash. For the bank, we also replicate the same. 5,000 plus 620 plus 530 plus 500 plus 660. So that gives us 7310. I believe it is higher than this. So 7310. But let me confirm that total. To confirm it was less than that. 650 plus 1,000 plus 120 plus 1,000 again plus 970. So this gives us 40. So the difference between that 7310 minus 3740 is what gives us balance 3570. So this is the excess cash we are remaining with, and this is the excess amount we are having in the bank. So this is what gives us, you don't need to have that entry. It was just helping us to calculate. So that is a 2-column cash book. What did we say is the difference between a 2-column cash book and a 3-column cash book? The difference between a 2-column cash book and a 3-column cash book is that a 3-column cash book, we are adding one extra column after the bank. One extra column at the bank, which is discounts. That gives us discounts. So it's something like this. So in a 3-column cash book, we are adding a section of discount allowed for receipts and discount received for payments. And we have an example 2 from our notes that enables us to prepare a 3-column cash book. So let's have a look at it. A 3-column cash book is to be written up from the following details, balanced off, and the relevant discount accounts in the general ledger are shown. Now we are in the month of March. So these are the dates in the month of March. So we'll be posting the entries. The key point is it a receipt or is it a payment? Receipt goes on the debit side. Payments go on the credit side. The second question, does it go to the cash or does it go to the bank? Does it go to the cash or does it go to the bank? Let's read each transaction. Day 1 of March, balances brought forward. So these are closing balances in the last period. So 1st March, so this is balance brought down from the previous month. We had cash 230 and bank 4756. Cash was 230 and the bank was 4756. 4756. We go to the next transaction. The following paid their accounts by check, in each case deducting 5% discounts. So paid their accounts, which means we received them. Paid their accounts. The following paid their accounts. Paid as in other words. The following paid their accounts. So that is on 2nd March. So 2nd March, the following paid their accounts, and there is the key point here. The following paid their accounts by check, in each case deducting 5% discount. So every time we are deducting 5% discount. So R Barton, they paid us 140. So 140, but we are deducting 5%. So 5% of 140. So that is 0.05 times 140. So the discount was 7. The discount was 7. How did I get 7? It is 5% of 140. Now 7, you minus from 140. It was by check or by the following paid the accounts by check. So it was going to the bank. So 140 minus 7 gives you 133. So 133 plus 7 should give you a total of 140. The next person is E. Taylor. E. Taylor. We will have more transactions in this. E. Taylor, it was 220. 220 we deduct the discount. 220 times the discount of 5%. So that gives us a discount of 11. So 11 out of 220, it means we are remaining with 209. 209. So 209 plus 11 should give you 220. And then next, R is 800. R is 800. We discount 5% times, was it 800? 800, it gives you 40. So this will give you 760. So we are done with that date. We go to the next date. Paid rent by check. So on the 4th March, paid rent by, was it check? Paid rent by check, 120. There was no discount provision. Next, G Cotton lent us by check. So to lend us is to borrow. So J Cotton, 6th March. J Cotton, is it J Cotton? There is no R. J Cotton lent us, paying by check, 1,000. Check. Okay? Next, we paid the following accounts. We paid, so going out. We paid the following accounts by check, in each case deducting 2.5% cash discount. So there is a 2.5% discount. So it's now 8th March. On the 8th March, it was 2.5%. So there was N Black. There was another person called P Towers. P Towers. There was another client called P Towers there. C Rose. C Rose. So let's start with N Black. So N Black, 2.5% discount, 360. So 360 times 2.5, 0025. So that gives us a discount of 9. So we'll take 9 and minus from 360. That gives us 351. Was it check? By check, yes. So that gives us 351. 351. Next, Towers. 480 times 0.025. So that gives us 12. So 12 you minus from 480. That gives you 468. Next, Rose is 300. 300 times 0.025. It's 7.5. 300, that is 292.5. Okay, I think I've got it right. Next, we have paid motor expenses on the 10th. So on the 10th March, motor expenses. So motor expenses, 44 in cash. Sorry. It is cash. So 44 in cash. That is on the 10th. The next date, H. Harkins pays his account 77. So H pays his account 77. So H. Harkins, so 12th March. The person is called who? H. Hankins. H. Hankins. H. Hankins. So H. Hankins pays his account 77 by check 74 and deducting 3. So 74 was by check and 3 was discount. Next we have paid wages in cash 160. 15th March. Wages. So they paid 15th, they paid in cash 160. Next, the following paid their accounts by check, in each case deducting 5% in cash what? Discount. So on 18th, it was again paid by check. So the following 18th, the following paid their accounts. If they paid, we received them. By accounts, in each case deducting 5% cash discount. C. Winston, R. Wilson, and H. Winter. C. Winston. The second person is called R. Wilson. R. Wilson. The last person is called, and son. Okay, and son. The last person is called H. Winter. H. Winter. H. Winter. So what were the amounts? Winson is the first person. Winson is 260, deducting 5%. So 0.05 times 260. So that gives you 13. Was it 260? Yes. 13. Was it check? The following paid the accounts by check. Yes. 13. Here is 13. 260 minus 13, that is 247. Next, Wilson, 340. 340 times 0.05. 17. And 340, that is 323. And then next, 460. I'm reading through these values. 460. 460 times 0.05 is 23. 23, 460, that is 450, 447. So we have posted that entry. Next date, cash withdrawn from the bank for business use. Cash withdrawn from the bank. So that is 21st March, business use expense. So 21st March, cash withdrawn from the bank, 350 for business use. 350. Next, cash drawings, 120, 24th March. Drawings, cash drawings, 120. So it is 120. Next we have paid T barriers, his account of 140 by cash, 133, and having deducted a discount of 7. So 25th, is it 25th? Yes. 25th March, paid T Briars. T Briars. T Briars. Paid T Briars, 140 by cash. By cash, 133. And the discount is 7. Okay? Next, both fixtures paying by check. So 29th, fixtures paying by check, 650. And lastly, received commission of 88 by check. 31st March, commission received by check. Commission received by check is 88. So that is how we have our entries. And then what did we say? You need to cast. Casting is getting the totals. You add the side that is more. I believe if I reflect on the figures, this is 230, this is more than 230. Is it? Yes, this side is more than 230. So we have 44 plus 160 plus 120 plus 133. It gives us 457. 457. And then we get the difference, minus 230. So that gives us 227. So there was some overdrawing March. So this is balance carried down. We'll also need 31st March, balance carried down. So let's look at the receipt side, the bank. 44, I'm trying to see which one can be more. Yeah, this side is more. 47, we are winding up. 47.56 plus 133 plus 209 plus 760 plus 1000 plus 74 plus 247 plus 323 plus 447 plus 88. It gives us 8,037. 8,030, and then we remove those items. Minus 120, minus 351, minus 468. I'm minusing this. Minus 292.5, minus 350, and minus 650. What do we remain with? 5,800 and this is 5. 5,805.5. And then for the discounts, you only need to get the total. You don't get the difference because this discount is different from that discount. So we have 7 plus 11 plus 40 plus 3 plus 13 plus 17 plus 23. It gives you 114. And this other side, 9 plus 12 plus 7.5 plus 7, it gives you 35.5. Let's look at, in the next 3 minutes, let's look at a few practice questions. Only theoretical ones, because computational we already have. We already have the format. So we'll only focus on the theoretical practice question. Which of the following items will appear in the firm's cash book? In the firm's what? Cash book. A, remittance advice. Receipts from the sales of surplus equipment. Remember, in the cash book, we record receipts and payments. So remittance advice, receipts from sales, credit notes, and sales invoices. Sales invoices, credit notes, and remittance, they don't appear in the cash book. So the only item that appears in the cash book is receipts from sale of surplus items, because you'll be receiving cash. Next question. So the answer there is B. What is the purpose of an analyzed cash book? What is the purpose of an analyzed cash book? So what is the purpose of an analyzed cash book? To record sales and purchases? No. If there is sales and purchases in credit, they can be recorded in sales day book. To ensure petty cash payments are recorded correctly. That's recorded in a petty cash book, not a cash book. Next, to record entries from the bank statements received by an organization by its bank. That's not true. Lastly, to ensure that receipts and payments are summarized under suitable headings for posting purposes. That is true. The last question, maybe the others you can practice. The third practice question, you receive a check from a customer in payment which is banked. The check is then returned as unpaid. You receive a check from a customer in payment which is banked. The check is then returned as unpaid. What is the correct accounting entry for this, assuming you take no other action? So you need to identify a debit on your, which one is this? Debit your cash book and observe a debit on your bank. That is not true. You receive a check, yes, and debit your cash book and observe a debit on your bank statement. That is not true. You need to debit the cash book, but you don't need to observe that bank statement. Credit your cash book and observe the credit on your bank statement. That is not true. C, identify a debit on your bank statement. Remember, if you receive money in your bank statement, in the bank side, from the bank reasoning, it's a credit entry. But from our point of view, it's a debit entry. So C is correct. Identify a debit on your bank statement and make a credit entry in the cash book. So with those few practice questions, it brings us to the end of cash book. The other questions are ones that can be left for your personal revision. So question 4, question 5, and maybe 6, 7, and 8. I gave more questions that you can use to practice. 7, there is the 8th. Okay, so those are questions that can be used. So our next just tells us that we have concluded on this topic. And that brings us to the end of this unit on preparation of cash book. Remember, we have 2 types of cash book: 2-column cash book and 3-column cash book. Let's meet in our next session, which will be preparation of a petty cash book. Thank you. Let's meet in our next session.